Good morning out there, traders. It is December 28th, 2023, and welcome to the Apteros Daily Market Insight. We will go over our recap from yesterday and then we'll update our levels for today. So, taking a look at what was going on in our planning yesterday, we had a line in the sand up above, and we were essentially looking for scenario one, which was holding up above this line in the sand. Of course, we had a lot of different things going on from yesterday, but this is the only thing that we really need to work with for our recap today. Now, what was really important about yesterday, and I mentioned this in the DMI, was how we were going to accept around this neutral level. In other words, for further upside, I was saying that we needed to get up above that neutral level to clear out and get up into that 48, 44s. If we didn't do that, a pullback was likely into our line in the sand, and this was actually an opportunity to possibly short. But I had mentioned that it was against the overall context, against the overall trend of what's happening in the ES. So it's not exactly an easy short or a short that I would advise anybody taking. So it was one of those situations where, yes, we had opportunities to the downside from this neutral reference, but if you were going to take them, treat them more short term, scalp like. They weren't overall contextually strong ideas. So let's take a look at kind of how the session evolved from there. So we had our holds of that line in the sand area, not able to get above that neutral reference. That gave us an indication that we should really be sitting on our hands waiting for a deeper pullback into our line in the sand. Now, were the opportunities to short? Yes, you could have shorted off of these highs and looked for rotations to the downside. But like I said, against the overall context, not advisable type of trades, but definitely, if you have short-term tools or skills or other things that you're using, they were opportunities if they were defined in your process as such. Of course, we end up seeing an inflection to the upside, still not breaking above our neutral reference here. You can see a lot of the highs getting rejected in this particular section here. And then, of course, we see a downside move pretty much into our line in the sand. And once again, not quite getting to that area. So front running it a little bit. It's understandable if you did not get this inflection coming out of our line in the sand and working with scenario one here. So if you didn't get that, it's understandable. It didn't really come into our line in the sand at all, which makes it very difficult to just pull the trigger on a turn or inflection coming up into our neutral reference again. So this is one of those days where the randomness in the market kind of makes for less than optimal type of opportunity, right? And there's nothing wrong with just passing on a day like yesterday and just kind of saying, well, nothing really set up perfectly for me there, so no reason for me to put risk into the market. Remember, you always have that option to pay attention to what's happening around those particular areas that you want to be involved in. And if the market doesn't get there or doesn't quite set up the way you want, it's okay to pass. So let's update our levels and take a look at our scenarios for today. Okay, so taking a look at the contextual landscape for today, we are actually in a bullish zone currently. We're going to be paying attention to how this all plays out. Now, we have some actually good opportunities on either side of the market, depending on the acceptance picture. So up here, we're looking at a possible situation, this line in the sand, with the current scenario, scenario one, is that we hold this line in the sand, continue the inflection of the upside, 48, 44s, 45s is the overall destination there. And then up above there, we have a lot of open space. So if we get above this particular neutral reference, you're going to be monitoring that for any type of trend following or continuation to the upside there. Really, the overall target that we're looking for is that 48, 45, 44, area, something like that. If we get below this line in the sand, in other words, scenario two, we break down below it, that is a decent opportunity to get short and follow the inflection back down into this 48, let's call it 17 to 13 type of area. So these two options are pretty good. Right now, we are seeing the acceptance to the upside. So looking for the bulls to engage and interact with this particular line in the sand at this point. If it fails or breaks down, then the shorts are a good opportunity as well to the downside here, looking for that first neutral target area. And then, of course, from there, it is very possible that we end up seeing, back and forth in between that neutral area. If we fail within that neutral area and get down below it, then a pullback into our lower line in the sand is definitely in the cards. So then we'll be looking at scenario three, which is a hold of our lower line in the sand, coming back up into that neutral reference as a general target. And of course, any continuation in the upside from there would have to clear out that neutral reference. And of course, scenario four is if everything breaks down for the bulls and we end up seeing a pull down, I guess you would call it, or a breakdown into that 47.66 type of area. Scenario four, not necessarily something that, is likely, but definitely paying attention to what's happening in the market. Excuse me. And planning for everything, right? So that's kind of what we do with our DMIs and our different scenarios. We take a look at the whole entire landscape and how things could evolve. The main thing I'm looking at is this upper line in the sand here, paying attention to scenario one, holding up above that. If we really don't see a good inflection or a turn from there, going to be looking for the breakdown into this particular zone between our upper line in the sand here and our neutral reference. And just monitor that, because what could end up happening today is something like this, where we break down into it, this neutral reference holds, comes back up, and then we actually could see a re-engaged market getting up above this line in the sand again. So definitely pay attention to what's going on around our upper bullish zone here, because it could be interesting how this particular market plays out for today. All right, so mind your risk, trade well, and follow your process today. Have a good trading day. Remember, we're still in that holiday week, so things have been, let's just say, a boring or less than energetic type of auction. So keep that in mind, and hopefully you're making the adjustments for the current situation and market landscape.